Greg, always nice to see you.
Melissa Crew, how are you today?
let's
along.
Yeah, let's start it off with the NASDAQ, Greg, because the tech has certainly been a leader for quite some time.
I'm getting extremely skittish here. I know Joe has defected. Guy certainly has his worries with this market. I feel the same way, and I'll show you why. The NASDAQ went from roughly around 2,300 back at the end of '07 down to around 1,290 this past March. The recent move, they have 68% here, not that high, but we've come back 62% of the entire loss. Now, that outpaced the S&P. And just to note, the low in the NASDAQ this past March was not lower than the low that we had in the correction in 2002. In the S&P, we did violate that low. We did not in the NASDAQ. However, the correction of making up more than 62% of the entire losses in the last 6 months has me extremely skittish. And the other reason is that we're well above the 200-day moving average line. I got to tell you guys, in the next couple of weeks, we could have a pullback here, and it could be meaningful.
So, Greg, you're using the NASDAQ as a catalyst for a direction of the market, but what exactly in terms of sectors, industries, where do you want to take it? How do you want to go short? Because I don't think you want to go those NASDAQ names and be short them. I think you want to look elsewhere.
Joe, if you look at, what's driving the beta, I mean, I agree with you. There are some things, there are some names within the NASDAQ that you definitely want to keep as part of the portfolio. And I think Kramer did a good job the other night of looking at some of those names. However, I think that home builders, even though they've had some new highs today, I think are ahead of themselves. I definitely think that there are some names in technology that are so near the last 5% of their moves that it's just way too risky to hold in the portfolio at this point.
Let's talk about one of those names that seem to be a head scratcher these days, Greg, and that is Starwood Hotels. The fundamentals don't necessarily seem to bear out the move that we've seen recently in this stock.
Melissa, I did a lot of work this week. I'm a believer, since I'm a technician, that technicals lead the fundamentals. And I think a really good example of that is in the hotel sector. Starwoods went from around 55, 56 all the way down to the recent low of around 9. Now, we put a low in March at 9, and it could not be, and still is, one of the worst periods for the hotel industry that we have seen in the last 2 to 3 decades. Conferences are down, bookings, business travel, yet technically, the market's put in a low in March. You can argue that a lot of sectors were on the cheap and people wanted to buy. However, a move from 9 up towards 34 this week. And now you're starting to see J.P. Morgan jump on, and their economists say that we're coming out of this cycle. Could be great for the hotel sector, but the technicals led the way for the last 5 months. Now I think it's rough when they say an objective of this stock is 39. You're into the last 5 points of it. You should have been on the train a long time ago, and the technicals put you there way ahead of the fundamental news.
Right, and Greg, 10-second analysis of RIM, because we're just about out of time, but that is a stock everybody's watching.
Well, you make mention of it quite a bit, Melissa. I'm worried about it. It's been between 60 and 84 since April 1. We tested the 84, a little bit above it a few weeks ago. We're into that resistance again now. If it can't close above 84 in the next 2 to 3 days, I would not be holding a stock. I'd rather hold Amazon.
All right, Greg, thanks so much for your time and analysis, Greg Troccoli.